Greetings and welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor at wealthmanagement.com's RPA Edge and CEO at TROW, TPSU, and 401k TV. I review all of last week's stories and select the 5 most important and interesting ones, providing open, honest, and candid discussion you will not get anywhere else. So let's get real. First story, though October job growth cooled at 261,000 new jobs, it beat expectations of 205,000 and still led Fed Chair Jerome Powell to comment that the job market was overheated as the Fed raised interest rates again by 75 basis points to curb inflation, which is still raging. Unemployment ticked up slightly to 3.7%, and hourly wages increased 4.7% over last year. There are signs of a job slowdown, with Amazon and Apple announcing freezes, 50% cuts at Twitter, and layoffs of 2,700 announced by Credit Suisse. And fintechs are likewise pulling back as valuations fall. And though the job market is cooling, with fewer companies growing, other than the healthcare and professional and tech service sectors, benefits like retirement plans still play an important role in retention, which will continue to be important as workers seek higher wages. Next story, after reporting strong earnings as well as asset and advisor growth, LPL announced a $140 million purchase, which is the first time they bought a branch. They acquired FRGSIS, which is a $40 billion branch with 800 advisors and 85 banks and credit unions, and they're already using the LPL platform. LPL tops 21,000 advisors now. This move follows investments or purchases by fellow independent broker-dealers Cetera and Advisor, marking potentially the entry of large independent BDs into the already heated advisor M&A market. Stay tuned. Next story, Voya announced a $570 million purchase of Benefits Focus, a cloud-based benefits administration company representing 25 million lives, which will bring their total to 38 million. Voya now has the opportunity to cross-sell integrated worksite benefits to their retirement clients, as well as offer retirement services to Benefit Focus clients. Already part of the Fab Five, Voya recognizes that beyond scale, said now to be at a minimum of 10 million participants, providers must offer wealth and or benefit services to supplement retirement plan revenue, further raising the bar for the remaining 30-plus record keepers not uniquely positioned or without scale as the industry continues to consolidate. Next story, while the 401k echo chamber, fueled by lobbyists and certification manufacturers, continue to hype the growth of ESG investing, the reality is very different. Surveying 109 institutional investors last May and June, Callan reports that there is a significant pullback, with just 35% indicating that ESG is a factor in their investment decisions, down from 49% last year. And only 25% of smaller investors use ESG as a factor, and overall, of those that do not now use that as a factor, only 20% are considering it in the future, down from 24%. Meanwhile, Morningstar reports that over 2/3 of ESG funds underperform their benchmarks. State plans are pulling back, and others are concerned about conflicting and confusing government guidance as they await the final DOL rule, as well as concerns if the administration changes in 2024. Finally, Benetic, a DC Fintech, has retained the Wise Rhino Group to pursue a sale. Like 401kplans.com, which was sold recently to Envestnet, Benetic offers advisors real-time record-keeping pricing. But unlike 401kplans.com, which focuses on small plans, Benetic targets specialist RPAs and aggregators offering lower cost CITs, of which they take a cut, trying to become a de facto distribution company like FlexPath. Both purchases highlight how standalone DC fintechs struggle, needing a partner with distribution and/or technology like Envestnet. With far fewer fintechs than in the wealth management industry due to the lack of data and significantly fewer advisors, big wins in this market are difficult for fintechs, especially as valuations drop and funding becomes scarcer. So those were the most important stories from the past week. I listed a few additional stories I thought worth reading. Please watch the latest 401k Real Chat with UCLA professor Shlomo Bernartzi as he discusses the good, the bad, and the ugly of auto features. It's truly a fascinating discussion highlighting the future direction of DC plans. Please let me know if I missed anything or if you have any comments. Otherwise, I look forward to speaking with you next week on 401k Real Talk.